Testing 1 million, 2 million, 3 million. Sound check is fine. Good morning, everybody. This is Prince. It's 10th of March 2015. How's everybody doing? Crude oil CFDs on a MetaTrader 4 platform, and my broker is avatrade.com. Again, I have to repeat this in all video because their crude oil positions do not expire at the end of month. They roll over your position for a very small fee, and you can have positions in oil for a long time, as much as you want. It's not a big deal. Alright, now what do we have here? A daily chart. Okay, moving averages are trending technical indicators. When the market trends, you can use moving average strategies to make a lot of money because trend is your friend. So in the trending market, moving averages are a good tool, good technical indicators to make you money. But here's the downfall. Here's what's the disadvantage, or you can say one of the cons and pros, that when the market stops trending, the moving averages will not trend. They will move flat. Okay, a non-trending market means a sideways trading range, and when you have a sideways trading range, you should have an alternate strategy. You don't really depend on moving average. What you do is you try to understand. You don't try to. You have to figure out what are the lows of the range, what are the highs, what's the trading range. Okay, what's the trading range? How big is it? For example, this one. This is, I've drawn a rectangle for you, which shows me the trading range. So what we understand by this is that the sellers here quit, and they have now, buyers and sellers have agreed that current fair trading price for oil is above $47 a barrel. Okay, and the price itself now, the price here, let me choose the mouse cursor. You can see whenever the price comes down, it goes up from this area. When it goes up from this area, it starts trending towards down. So the point is, what you have to do in a non-trending market, identify the lows and identify the highs of that range. So you have to buy the lows and short sell the highs. Because the price of crude oil has fallen too much, I am really not planning to short sell a lot. Now coming back to our daily chart, you see one of the signs of moving averages failing is mixed signals. Here we have a bearish cross, then immediately we have bullish cross, then we have a bearish cross down the market for the past 2 days. Today's candle, yesterday's candle, it's bullish. So we may have a bullish cross once again. So what you really have to do is, when you have a situation like this, you go to your faster time frame. Faster time frame means if this is daily, your fast time frames are 4 hour, 1 hour, 30 minutes, 15 minutes. You identify supports. Now let us identify why should we buy here. Number one, we've got a trend line support here. This is our trend line support, and the market came here and it really bounced. That's point number one. Point number two, when I draw my Fibonacci levels, or my modified version of Fibonacci drawing tools, this is a good buy zone. There's a buy zone coming ahead, and historically speaking, you see these this is point number three. Candlesticks here, they show the shadows of the previous day's candles. They show here there was a lot of support. A lot of buyers came in to push the prices up. These are all technical clues that we have. Alright, now what do I need to, these are enough hints for me to ignore the moving averages. Alright, now I know when the market hit last week or last Friday at this area, I know the market is at the lows, the price is really low, and the buyers would step in to push it towards the highs. So what I do now, if I want to buy these lows, I go to the 1 hour chart or a 30-minute chart. Okay, the price comes here, strikes, buyers push it. I look for a buy cross. So there's a buy cross. I would have entered here at the break of this bar and collected how much? Let's see, about 93 pips. Okay, but honestly what I did was I didn't really enter at this cross because I was late, or I didn't trust this whole move of going towards upside. And I'll tell you why I didn't trust this move. The reason why I didn't trust this move is because our daily candle, it was below the 20 days and 10 days moving average. Okay, I was assuming that the price is gonna, I was anticipating, that's the correct terminology to use, that we're gonna have more lower lows and maybe come here and then bounce off these lows towards the upside. So I preferred not taking any action. If you see mixed signal, if you don't know what the market's doing, how it's behaving, you're confused, don't take a trade. Don't have the itchy finger. Don't force a trade. It will really ruin your trading account, trading psychology. So you don't understand, don't do it. But I always explain, if you miss the breakout, buy the pullback. So what I did, I drew my line here, mark the swing high, highest swing, day trade swing. I waited for it, and when the price came near it, from 30 minutes, I just wanted to make an entry. So what I did was I went to my 1 minute chart, okay, when the market was approaching these lows, and I looked for a buy cross here at one of these entries. I can't remember which one did I choose, but yes, I looked for buy cross to enter. So I have a long at 50.08 or 50.10, assuming or anticipating now that it is a trend continuation pattern, and the factors that are supporting this buy, like the trend line support, the Fibonacci buy zone box, the lows of the trading range, the support coming up from the previous candles from the daily chart. Okay, so I believe it's gonna trend towards the upside, and oil has been priced too low. It's a big discount, So in summary, this market, if you miss the breakout, no need to cry or whine, just buy the pullbacks and continue the ride towards the upside. Now, what are the targets? An important question that everybody wants to know. The target can be your previous day's high, which is here. Approximately here. These are your targets. You've got 3 targets. You can exit your position at 1, 2, or 3, or you can pyramid your positions, buy more here, and move stop loss for this trade at break even, or cover a lot of position, buy, and or even what you can do is exit here as well. Or you can put buy stops at both places. Pyramid, however you want. You can consider these as your breakout points or your target points. Another thing what you can do is, if you're trading more than 1 mini lot or 1 standard lot, you can take half of profits or quarter of profits at these areas. 1, 2, 3. This is the plan for now. If you're trading a big lot, or you want to trade with a stop loss, your stop loss is gonna be below this swing low or below the swing low, depending on you, what's your risk tolerance. Okay, but my stop loss would be here, but I'm using a very small size of 0.25% risk per 100 pips. So I don't need a stop loss. I can hold this without any pain. So let's say if this fails, okay, if this doesn't go in your favor, this market, what would you do next? Okay, you would wait for another buy entry, because I said to you that the market is really now not so bearish according to me. Mechanically, yes, on daily charts bearish, but I told you, where there are other compensating factors, the 4 factors, 3 factors, whatever it was we talked about, that we should be buyers. So if this failed, what you would do is go down, let the market fall to this box, this Fibonacci box around 47, 48 area, look for buy cross, yellow moving average closing above the red moving average, and buy it back to continue towards the upside, or let it come towards this buy area around 44s, 45s. Let it come here and look for buy cross to continue towards the like here, let me draw it for you, I'll make it visual. If it fails, this is what you should do. Let the market come here, and go back up. Okay, that's what you need to do. Otherwise, you can also do like this. If this one also fails, you can let the market go down. Okay, and let it continue from here towards the upside. Oops. Makes sense? These are the two options. You want to look for moving averages to show your buy cross at these areas. So you can ride the trend, and this is really gonna make you a lot of cash because you're holding the trades and you might add on your way up. Pyramid your position. This is the alternate plan for being a buyer on crude oil market. So yep, that's the alternate strategy. Oh, okay. And here's another thing that you can do. Let me remove this. So what the hell is this? Now delete. Control B. See the trend lines. Oops. Okay, this is the alternate solution. When the market breaks this trend line, wherever it goes, wherever, here or here, doesn't matter. When it breaks it, you know that this what support becomes a resistance, right? So consider this trend line as your resistance, and next time when the market comes, look for it. Let it go like this. Put your buy order, buy at this trend line. Consider this as your consider this trend line as your resistance, and use candle patterns, a breakout pattern, like the lightning bolt. There's a video on trading patterns. I'm not going to repeat how it looks like. It's usually like a thunderbolt. I'll repeat it. Let the market go towards this trend line, make a little pullback, and then break through it. That's what you need to do. Or it can also be, you can be aggressive. If it doesn't make a pullback, it's going to be very aggressive. Then it's going to pierce through it. So you can put your buy order above this trend line. I hope this video helped. It's very clear. If you have any questions, feel free to post in the Skype room for the members. Okay. Or what you can do is you can also post in the comment section of the YouTube video. If you want to open a trading account, you can click on the link below and open a trading account with Ava. Don't forget to put the introducing broker referral code of 34987. And that's it. Hope the video helps, and don't feel shy to post your questions, and I'm happy to help you. I'm glad to help you. I'm a technical trader. I don't really care about the fundamentals or the theory, and it's also, I not only with technicals, I do add some of mathematical calculations on risk management. So have a great trading week. If you have questions, feel free to ask, and bye bye for now.